Story time. When I was in high school, I had nothing going for me. I was that type of guy that didn't have any specific desire to. I had a lot of examples of what not to do and a few examples of what to do. I'm talking about family, friends, but overall, I didn't like any of the things they did. The conclusion I came to was I only have fun when I win, which makes me a competitive person. And when you're in the market, having a competitive nature is mandatory. Now we're talking about those people that like to play team games versus people that like to play single player games. Now Steven Ducks, he's one of those guys that is a heavy single player person. He can't play team games. What he's best at is the single player games where he can't blame anyone else, where it's all on him. It all comes back to how much commitment and determination to get to his goal that he put into it. And in most cases, everyone has that 10% chance to succeed at whatever they try it, if they put in enough effort and if they recognize the opportunity when it shows up. Trading teaches you this. And if you know this before you get into trading, it also helps you get better at trading, because that's all trading is. You need to recognize the opportunity, and the speed at which you recognize the opportunity allows you to profit more as well as risk less. So when I was in high school, I had a lot of clubs and I had a lot of sports. We had wrestling, football, basketball, track, football. I said football already. Bowling. Now, outside of my sports, I was also in clubs. Now, one of the clubs I really liked was chess club. I don't actually like chess that much, but I like the environment that the chess had. It had a little bit of everybody. You had the super nerdy types that you see in AP classes. Well, you also have people that were considered not as smart. We were all together to have fun. You can have that in trading, but you're going to have to make a great life-work balance. You cannot be in a bad mood inside of your personal life and then bring that into your trading life. There has to be a divide.
Interested in trading like Steven Ducks? It all starts with choosing the right broker. Ducks Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Ducks Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before, with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
Now, when you look at your trading journey, we have to understand there's a difference between people that just started, that don't know better, and they just try stuff, versus the people that are masters that also try stuff, but they have a lot of experience. There's people that are in a little early. Then there's people that are a little patient. And then after the patient people, there's the people that are late. You getting to the point in the chart where you want to be takes experience. It also takes data tracking. Now that could be your behavior journal, or it could be actual data about this setup and things related to the setup. And the main difference between the people in this chart is probably based off of your fundamental knowledge of trading. Let's talk about what happened this week. We had HOLO, MNY, and LRHC. Now, these companies, they have nothing to do with each other. Now, when we look at HOLO, we know this stock went up to $98, all the way from $2. Now, doing that is very impressive. When we look at HOLO, we know this has extension. Now it's only a matter of time before exhaustion comes in. Now, how do we know it's exhausted? Well, we have to look for weakness. And when we look at HOLO, it was that first sign that there was going to be a red day. Now, we knew this because there was an extreme pullback. We're talking about the 50% and then a bounce. Now with this bounce, it didn't reclaim any significant levels. Instead, it bounced off half of that panic. Now, instead of the stock ranging between the resistance and the support, instead it gapped down overnight. This overnight was different than normal overnights because it was a federal holiday, which means it's a 3-day weekend. No one wants to hold it to a 3-day weekend because you have to pay for each of those nights. It's just a bad way to kill your weekend. You're gonna be focused on the stock the whole time. This stock was massively overextended. The price is expensive. Why would a person try to buy at such a high price? The only correct answer was to short. And after it gapped down, a lot of people might have thought, maybe this is a good time to buy the dip. But this is such a high price, most people can't even afford large orders like that. And do you even want to scalp something with a micro float at $50? Probably not. When we look at the reason why this stock went up, it didn't even have a strong, confident catalyst. Added on to a long weekend, there was no way that this was going to stay up. Now, The same logic can be used on another ticker, MNY. This one was on SSR and it was going through a resistance. It waited till the next morning to break that resistance. And when it broke, it went all the way up to $5 in a very short amount of time. Now, when it did that, it kind of confirmed a resistance. And a lot of people took their profits because they were tired after waiting 3 days for their money. This might not sound like a lot, but if you're just a person that's just trying to get a quick buck, which is what most people are trying to do when they go long, they got double their money. And then they got out. Now, there were so many people that were getting out that it lost the momentum and it went all the way back to the support from Friday. We have to understand, when we look at resistances and supports, we look at whole and half dollars. We're talking 50-cent marks, dollar marks. Now, this one had a resistance around 250. And now we know this because it tested on Friday, 250, 2, maybe even 3 times. And during the pre-market, it broke that resistance and it doubled. It went all the way to $5. This is something normal. When you see a breakout, it doubles. But when this one came back, it didn't just come back a quarter or 50%. It came all the way back to the previous resistance, which is something you don't see normally. This is important because it's bounced off the previous resistance, which shows that this didn't have a strong catalyst. If anything, it was probably a lot of people hyped up because of HOLO or the 3-day weekend. We know there's been a lot of money that's come into the market recently. Now this can be because we're above $500 on the SPY or the new wave of traders that are coming in. We just know that the volume has definitely picked up and people are becoming more decisive when it comes to their money because on Monday, the volume was competitive. Some people were on HOLO, other people were on MNY. We ended on Thursday with LRHC. Now this one wasn't as impressive, but it did go from $150 up to $6. Now that's more range, but it did it on less volume. After it hit the high of the pre-market, it faded the rest of the day, which proves that this didn't have a lot of momentum to it in the first place. Now the volume of the day, it was pretty decent. We had 10 million volume in the pre-market, which gives us 100 million estimate. At the end of the day, we didn't even get close to that estimate. We got to 30%, which means this lost its momentum very early. Now, when it comes to any type of strategy game, it helps you organize your thoughts. And the faster you get at organizing your thoughts, the quicker you'll be when it comes to making decisions and trading, because you have to have pattern recognition. Now, we understand that the pattern is key. And the faster you recognize this pattern, the faster you can do your pre-market prep. We're talking about having your risk management ready. You recognize what the pattern is. You see the conditions and you are mentally prepared. I'm talking about you're deciding if you are on the short side or if you're on the long side. And if you're somewhere in between before you make a determined decision, you're going to make a mistake. And that mistake is going to cost you money. Now that's what happens in trading. But the more strategy games you play like chess or StarCraft, those can help you get better at thinking faster. The more comfortable you are, the more energy you have to put into your trading. Now, we like to say that overwork is injurious and leisure is perilous. If you are too lazy with your work ethic, you're not gonna make it in trading. If you overwork yourself, you're gonna burn out, or you're gonna try to force something or overanalyze and make bigger mistakes in trading. When you first start out, you think that you just have to press a button and you're there for the quick money. But when you're a veteran trader, maybe you're overworking. Maybe you're learning the wrong edge. You're not looking at the old data and finding something new like you should. Instead, you're looking at the old data and you're trying to force it. You're overanalyzing to the point where you just fear and don't even like trading anymore. This is why you have to have your behavior journal. You have to reevaluate your goals, as well as learn to articulate and organize everything related to your trading. We all come to the market to make money, but we don't care about what time we get to that point. We just want to do it right. Slow and steady wins the race when it comes to trading. All right, guys, that's all I got for you today. If you like what you saw, hit that like and subscribe button, and I'll see you in the next video. Peace.